Hey, what's up? We're going to get some insight from my man Stock Up with Larry Jones and Stocks with Josh. These two guys know a little bit more about what's going on than I do. I pretty much watch them all the time. So let's see what they got to say about the upcoming week in the stock market. Let's check them out real quick.
To do. I'm going to start by saying the market, we have big tech earnings still going on. We're still in the midst of it. We just had one round. We had Google, we had Tesla,
Intel.
Intel, and we have those, and things are coming in. We already have financials, right? And things are coming in, and I want to talk about what the market is going to be looking for. The Fed, we have another Fed meeting coming up,
This is a big week.
FOMC meeting coming up. That is a big market mover. You're going to see movement that day. I've been tracking the last 18 Fed meetings, 18. And there is I want to.
So basically, to touch on what he's talking about, uh, I guess the Fed meeting is a meeting that occurs, and after it does a serious fluctuation to the price in the stock market. And what he's been talking about is usually is caused in the last 18 years the price to go down after the Fed meeting.
To show you this. There is a recognizable pattern that I actually trade. You know, the saying is only fools trade during an FOMC meeting. Well, this fool has made money every single time because I see a pattern. What we have a new Fed now, so that pattern may be broke. But let's just talk about the overall market. I'm going to start by talking about what I see, and then I want you to unbiasedly talk about what you see. I've been constantly saying, I went back to the last two, on my last video, the last two midterm cycles, not the last 2 years, but the last two midterm cycles. And it was nothing for the market to pull back 20% between now and October, bottoming out somewhere October-ish. Okay, sometimes September, sometimes October. The difference.
So what he's saying is pretty much around that time, in the August September time, be expecting a heavy market pullback of at least 15-20%. Which, if you're expecting it, it could be a big money making opportunity.
This time is that we have AI and this big tech bubble and the AI spin. And actually, if you ask me, AI kind of saved it being a bubble, but it kind of saved the market from being lower than where it is now, in my view. Okay? I expect that we are going to have a cool off, but I don't think it's going to be a straight drop. I think it's going to just bounce. Lower lows, lower highs. Like I've been saying, lower lows, lower highs, lower lows. If you're just trading intraday, it won't be noticeable to you. But when you zoom out, you'll be seeing that.
So this is what he means by lower lows, lower highs. If we go here, we start here and then we end the day here. So we got a lower low than we did from the previous day. And then we have a lower high starting from the previous day. So that's what he means by lower low, lower high, which just means that the market is on a downtrend.
The drops were lower and the pops were lower. All the while, you need to be careful not to buy every single dip, all right? So I'll come back and wrap it up at the end. I just want you to jump in right here and tell the people what you think.
Well, so what I want to connect with people on is their trade plan, okay? And right now, there's companies that have already pulled back fairly nicely. And if you were to invest in them with the mind frame that you're looking for the gain in 2027, there are some investable companies right now. Microsoft is one of them.
Microsoft is one of them.
Their current price does not line up with their consistent earnings. Some of the SaaS companies, all they've been doing for the last couple quarters is increasing their earnings quarterly, and there's been no destruction to the business through AI, right?
So I was explaining this earlier. What he's pretty much saying is these big companies are making plenty of money, but their stock isn't moving to show that. And in some big companies, the stock is actually going down. And then what they're pretty much saying is these companies are spending their earnings to try to plan for the future. So pretty much one day they're saying that, load up and prepare now, and when the train takes off, you want to be on it.
And so if you were to, at some point, those two factors will come into alignment. So if you're thinking short term, this is what I want you to understand, okay? If you're looking to get into something for a swing trade this coming Monday and get out of it on Wednesday or Friday, there's not a lot of attractive stocks, okay? I gave everybody on my page, Stocks with Josh, the simple buy sell indicator that is the MACD. I always talk about the RSI when I'm trying to get a sense of acceleration for an asset. But I said to everybody, I said, it's time to start looking at the MACD. Do we have buy orders? Do we have a 1 hour indicator above the zero line that tells us that the trend is currently going up? And I showed 3 or 4 of the Mag 7 and none of them had that, okay?
So what he's pretty much talking about here, the MACD, the MAG, is, let me bring up the chart here. It's pretty much a tool used um, to help investors kind of get a basis on when they get into the market. So down here is our MACD. So it's this graph with the two lines here. So that's pretty much what he's talking about. And we'll get into that later on getting into explaining this, but I just wanted to show you what he's talking about. And then you can, if you want, do your own due diligence on what the MACD does in the chart here.
Okay, so all of them were sort of printing or operating under a sell signal. Does that mean that if you're a long-term investor, that you would do poorly to drop some money on Tesla around $300 or to drop some money on Microsoft at $340? The answer is, in my opinion, no. You're not buying the top. A lot of these are discounted. It's just that you can't throw all your money in right now this week and expect to see green at the end of this coming week. But if you have a long-term vision of Wall Street, there is an attractiveness to this current market because many stocks are down and not up. If you're swing trading, the safest bet is to assume that the current trend is going to continue down. So you got to look at inverse ETFs to the Mag 7. You want to go.
So I want to just mention swing trading for the beginners. What he's pretty much saying a swing trade is you'll get into the trade kind of at the end of the trend, whether it's an uptrend or downtrend, and then you try to pretty much find the bottom. You'll get in the trend. You'll ride the trend until it stops, and then you'll get out of it and pretty much rinse and repeat.
With the flow. The saying is the trend is your friend until the end.
Trade the trend.
I'm telling everybody here that the trend is confirmed down. And we're not trying to guess the bounce so that we could get into some little trade from Friday to Monday, right? If you're looking at intraday, then you've got to trade the smaller time frames. Larry, I think a lot of people who watch us are confused about what's going to happen in this market.
So I'm gonna just leave it there. I don't want to make the video too long, but shouts out to Stock Up with Larry Jones and Stocks with Josh. You guys go check them out. I have their links in the description. I always shout out the creators and give them their due diligence. But yeah, looks like we got an interesting week coming up. So let's get ready for it. Talk to you guys later. Peace.